you tired of always getting stopped out? Well, then pay attention, because this video is for you. Hey guys, John Fibonacci here. Welcome to this video. The goal of this video is to get you guys to understand a little bit more about why you keep getting stopped out, probably more than you should be or more than you would want to. So let's get right into it. So the very first thing is to utilize multiple time frames. So too often I see traders only using one time frame for their entry and management and things like that. But what people fail to realize is that if you only use a small time frame, you're missing out on the medium and larger time frames. Now, I do have a video on how to set up what you see on this screen, which is the triple screen. Okay, I have a YouTube video on that. You can go watch it after this. It's called the triple screen. So the reason for this is because I want to make sure that I utilize at least 3 time frames. So on this particular chart, I have a 1 minute here, a 5 minute here, and a 15 minute on the bottom left. So that way, on the 1 minute time frame, I don't get lost in the sauce, and I know what the higher time frame should be doing to make sure that they're in alignment. If you only spend time on small time frames, and if you don't know what's going on the higher time frames, that can trip you up. Moving on to number 2, don't use too small of a stop loss. So I know sometimes we see high risk reward traders, right? The 1 to 20, 1 to 30 risk rewards and stuff like that, but you don't need those types of trades. Okay. Now, my rule of thumb is if I'm going to utilize a 1 minute time frame entry, then I may not want to utilize a 1 minute stop loss. I may want to utilize a 5 minute time frame stop loss, because if the stop loss is too tight, the market is likely to get us out and then only to go our direction, and that's not what we want. In fact, Mark Douglas calls this a trading error, right? Getting stopped out prematurely just to see the market go the direction that we want. We don't want that. So, you know, you're going to have to find what you're comfortable with. I'm not saying to utilize a large stop loss, but I'm saying too tight of a stop loss can be a bad thing. Number 3, be mindful of the economic calendar. Here is an example of the economic calendar. This can be found at forexfactory.com. And there are other calendars that you can use. This is the one I see most people using. This is the one that I use. So I have a filter on here that gives me the level 3 news, otherwise known as the red folders. And you could even have the orange folders on there if you want. You can apply the filter and it will give you all of the details that it has on red folder news. So we want to be mindful of things like CPI on Tuesday or unemployment claims on Thursday and GDP for the Canadian dollar on Friday. We need to be mindful of these things if we are trading currency pairs or indices that have to deal with that specific currency. So there should be no excuse. I didn't know there was news. You need to check and don't forget that news is going to be here. All right, number 4, be mindful of the time of day. So we all should know by now that there are good times to trade and there are not so good times to trade. So I prefer the indices. So I'm going to trade the New York Stock Exchange hours and the morning session. Then there's lunch and the afternoon session. So I'm aware of these times and stuff like that. And, you know, that's what I trade within. So setups may occur not within the ideal time window, and that's not a trade that I want to be taking. You know, to me, it's lower probability. I'm more likely to get stopped out, and that's not what I want. So if you're someone who trades currency, like the Euro USD, for example, then you need to be mindful of certain things. London open, London close, the New York and London overlap, New York close, and stuff like that. So If a setup occurs that's not within a specified time window, that may not be a trade that you want to take. So you want to limit trades to time windows that are higher probability, so that way you are less likely to get stopped out. Number 5, reverse engineer stop loss orders. So this is likely going to be the biggest one for most people, and that's why I put it at the end. Um, Most people by now should know what liquidity is. If you've been trading the Forex market or any of the markets the last few years, especially the smart money community, you guys know that liquidity rests above and below the marketplace. And we want to identify areas of liquidity. So I'm just going to go back to the S&P for a minute, only because that's really what I trade the most. If you look at this chart, and we'll just keep the 1 minute on here for sake of example. Okay. So you see this setup right in here that I actually took the other day, and I ended up taking partials, and the rest of it was a break even. So it wasn't the greatest trade. However, I want to explain the idea behind it. So the market opens at 8:30 here. Okay. I think it's this candle right here. I've actually got an indicator for that displays the New York Stock Exchange opening price. Okay. So the market drops lower, actually takes a previous low and a couple more previous lows. Then the market rallies. And you can actually see here the market trades higher quite a few different times. Okay. So it was this run up here where the market has now made a 1, 2, 3 higher highs, right? So then we get this breakdown in price. Okay, so I know that anyone who got in a retracement down here or got in on a retracement here or is trying to get another retracement here around 950, if they're trying to go long, then where are people likely to place those stops? That's going to be below this low right there, and likely below this low down in here. Now, given the price action, we see that the market does come down and it takes this low, and that was a good area for partialing out. And anyone who was long that had a stop loss there, they got taken out. But reverse engineer the idea, right? Think about this. Anyone who got stopped out here, look what happens next. They got stopped out, but then the market rallied and went their direction. So we don't want to be part of that crowd that it happens to, you know, but unfortunately it happens, but we have to learn from these kind of mistakes and these ideas. So personally, what I decided to do was short, and then I was actually aiming for a lower target. I just didn't get that, but I was exiting as price was making a new low. So that's kind of the idea, right? So price trades from liquidity to liquidity. So think about this. If traders had shorted this, market trades lower, retraces, and then trades lower, right? That looks to everybody like it's a downtrend. So if they're shorting a retracement higher, where their stop loss is going to be, they're going to try and short this market with a stop at this high. Or if it's a little bit more loose of a stop loss, it's going to be up here. And so what do we notice that the market does? It gravitates above that high and then extends to even grab this high as well. Okay, so we know that the market was attacking anyone who's been short that has a protective buy stop above this high and above this high as well. So look, the market can be a tricky place, but you got to think to yourself, if the market has been rallying, where would buyers have their stop loss? And so that's kind of what I just explained, right? If the market's been trading higher, where are the stops going to go? Below recent lows. If the market has been trading lower, where do their stops go? Above recent highs. And so that is the flip side. The other question would be, if the market has been declining, where would shorts have their stop loss? So that's what we want to do. We want to reverse engineer what is everybody else doing, and we're going to either do the opposite or potentially do something that is going to be against the crowd, and that's where a lot of the good trades come from. So hopefully you were able to learn something from this video. I appreciate you guys being here. If you got some value, give it a thumbs up. I would greatly appreciate that. Subscribe if you're not subscribed already, and I'll see you in the next one.